The first thing I wanted to kind of point out is just that we're seeing some weakness and maybe some cracks in the armor for some of the biggest mega cap stocks, and specifically some of the tech stocks. The stalwarts: Apple, ticker AAPL; Nvidia, ticker NVDA; Tesla, ticker TSLA. Those are three names that I've been watching really carefully this week, and they're all showing some cracks in their armor. They're trading lower. And for each of them, there's kind of a different story behind them. For Apple, it has to do with China's banning Apple phones in specific government buildings, and which could wind up being a much bigger deal for Apple. So they're worried about their sales because China's an important market for them. Nvidia, that's obviously a big AI, artificial intelligence tech stock. They make very high powered processing chips. And the stock has been on fire this year, and now it's starting to roll over after a very positive earnings announcement. One of the things that you learn in this business is that when there's good news and a stock doesn't trade higher after that good news, it's kind of a red light warning sign that something may be wrong, and that this stock may be trading lower. Because if it doesn't trade higher on good news, what will it trade higher on?
Yeah,
And then
right.
Tesla is another one that they've actually been cutting prices for many of their existing models, and that's going to cut into profits. But it's what they have to do to stay competitive as the rest of the auto manufacturing world kind of catches up and starts to put out more viable electric vehicles. So they're dealing with competition really for the first time in a major way in that company's life. So those are all important stocks for the broad market, and they're starting to trade lower. It's important to kind of understand how the market indices or indexes, or I think the technical English term is indices, but how these barometers are organized, and how these individual stocks affect the markets. The S&P 500 is kind of the most widely followed market index, and it's a market cap weighted index, which means
Right.
bigger companies have a much bigger effect on where the market's trading. So if Apple drops by 2% and every other stock in the market goes up by 1%, Apple actually has a big effect on the market, and it would cause a big effect on, even though the 499 other stocks are trading higher, Apple would actually hold things back. And this is interesting because as an individual investor, you probably don't invest the same way, right? You probably put $5,000 into each of several trades, or $10,000 into each of several trades, or whatever makes the most sense for your account. But you don't look at a stock and say, well, this company is a big company, so I'm going to buy more of it. And this company is a small company, so I'm going to buy less of it. So the indices in the S&P 500 specifically doesn't always follow the way that an individual investor would invest their capital. And in many cases, these large stocks are the ones that are driving the action higher or lower. And your returns may be different because you're more widely diversified. Hopefully, you are more widely diversified and not kind of beholden to these few handful of stocks that are driving the market higher or lower. Now, this can work in our favor and it can work against us. For instance, in the first half of this year, the big mega cap stocks were strong, and so that helped keep the broad market moving higher, even though some of the other stocks were really not performing as well as we would have liked to see it. Now we're starting to see a little bit of a reverse of that, where the big cap stocks are pulling back, but there's plenty of strength under the surface in many other areas of the market. I'm actually keeping a close eye on some industrial stocks, on healthcare stocks, and we'll talk a little bit about the different energy stocks, the different areas of the market that are showing strength. But just for example, SYK, Stryker, the healthcare company that we have in our Income Alliance portfolio, we were actually able to take a nice profit today, and the stock looks like it's continuing higher, even on a day when the rest of the market, or when the broad S&P 500 is down. We've actually got a lot of green on our screen, as you'll see in a minute when I show you my trading platform, in our Income Alliance positions, despite the fact that the market is red today. So just don't pay too close attention to the market indices without understanding that the components within that index can be higher or lower. One of the things that I really love about the market that we're in right now is we are moving into more of a stock pickers market as opposed to just an index market. So in times in the past, investors were buying the market or they were getting out of the market, but they weren't making a whole lot of differentiation between the different stocks within the market. Now we're starting to see the correlation of different stocks actually decrease. In other words, one stock may be trading sharply higher while another stock is trading lower because it's focused, because investors are focused on what the actual companies are doing, on profits they're generating, on the specific sectors and where strength is in the housing market versus energy stocks versus tech stocks. And that is all very, very good for us as stock traders because it creates opportunities on both sides of the market. Right now, I'm really excited about our biggest bear position, NVIDIA, because it's trading lower and we're starting to see, as I said, some chinks in the armor there. At the same time, I'm really excited about our bullish positions. Costco's trading higher, gold is trading higher, Google's trading higher, Oracle's trading higher. So our bullish positions are moving in the right direction too. So in a market like this, in a stock pickers market, we're at a spot where we can make money on both sides. We can actually be a little bit more diversified into bullish and bearish positions. And that creates a more stable opportunity for us. And it creates just more plays for us to pursue. So it's a good spot for us to be in, and I'm really excited about kind of our potential as we head into September and then the final 3 months of the year.